I've checked the results. If you have taken a basket of 3 bank stocks, this 4 would have outperformed massively. I don't know if you've seen my previous video, how to invest $100,000 for dividends. Today, I'm going to review that portfolio and results are pretty good. So stay tuned right at the very end. In addition to this video, I'll be running through some comments because there are very interesting point of views over there. And there are actually interesting lessons that I can draw from these to share with you. And towards the end, you'll hear a speculative finding that I have. Speculative, again, I don't know full details. I just found some information and I'm connecting the dots. Maybe that could be profitable ideas. So if you're curious, continue watching. Hi guys, welcome back. Without further ado, let me dive on to the previous video I had, which was very popular. Check it out if you haven't done so. And also, let me run through the comments sections, which has very interesting points. If you think STI will go up further, stick with index stocks. With MAS 5 billion, maybe the funds will switch to mid-cap stocks that have moved much. This 5 billion program thing is the reason why I selected these 4 stocks, Franken, Dongwon, iFast and Sheng Siong, in my list to invest. So stay tuned, I'll give you some results. Next comment, STI is at all-time high, might have correction. As of this time of filming, it's already in correction. STI is down about 3%. I filmed the latest video on it, but these could be opportunities. As a long-term investor, there's no need to run for the hills. The better approach is to stay invested. Biggest question, will this bull run continue? I feel like there's massive liquidity in the market. Again, we don't know when the market is going to top out. And if we don't know, don't worry too much about it. Next question, revisiting this, all 4 stocks are down big time. Actually, they are up already. So depends on time frame also. So stay patient when there's corrections. Actually, those could be opportunities. If I 100,000, I'll invest in Singapore banks as the core of my portfolio. I've checked the results, good enough to match even DBS. And if you have taken a basket of 3 bank stocks, this 4 would have outperformed massively. Next comment, Franken and iFast are pretty high beta. Yes, they are. Doesn't feel that defensive. I didn't say they were defensive. I only said Sheng Siong was defensive because it's a consumer staple and recession proof and pandemic proof. Any ideas on deep tech company nanofilm? No idea about it. In the investment universe, I also don't know a lot of things. In fact, for investments, stick with what you understand and stick with what you're passionate to read up a bit more. It's okay to not know a lot of things. In fact, there's a saying, investing is about temperament, not so much of intelligence. Next question, too many all-time high companies in this 100,000 portfolio. When the price drops for many years, we trash it that it cannot make it. When recover, we say it's too high. So I think better is to focus on the fundamentals of the company. Watch, as usual, gave a like. Special shout out to Mike, thank you for the support. iFast went up yesterday. Would you still say it's undervalued at $7.47? Actually, now on hindsight, it looks very cheap. And I'll show you why. Next comment, your timing was impeccable. Thank you. But that was luck. Next question, 100,000 invest at a go or split into multiple investments? Okay, this is a very good question and I'll elaborate a bit further. My solution then again is it depends on how much cash you have on hand. If you have, for example, 200,000 and you have 0 investments, then maybe even 100,000 invested right away still makes sense. That means 50% equities, 50% in cash. It's still relatively conservative in my opinion already. On the other hand, if you have only $105,000 and you have already some investments, then of course we can't invest 100,000 one shot, correct? Averaging into the markets would make a bit more sense. So as always, if you need advice on a one-to-one basis, look for my links below. I position myself not only in investments, but also to use it as a vehicle to build you your retirement goals. So anytime you're watching this and you have questions, leave them in the comment sections. Let's make it constructive and let's try to learn together. Thank you for sticking with me. Now let's finally get to results. And without further ado, let me share with you in terms of which performed the least to which performed the most. And the one that performed the least is actually my biggest allocation of 40%. If you check the video, it's none other than Sheng Siong. In my eyes, it's okay. Sheng Siong has rallied up. And if you observe the share price, it's very flat for a year and then it suddenly climbed. But as long as operations are intact, you realize that the intrinsic value of Sheng Siong is going up. 2.9%, nothing spectacular, but definitely beats safe investments, correct? I introduced Sheng Siong because I was thinking, my video title is 1 year. There's going to be a market correction at some point. And having this as my anchor, I can show a bit more on risk-adjusted returns. Third best performer, Dongwon. Everything is as of 16th of July because that was when I first captured image in the previous video, so it's consistent a measurement. Tiong Woon has risen from 74 cents as of this time of filming. Tiong Woon rents out cranes, it's a part of the construction sector, and Singapore is doing a lot of mega infrastructure, such as Changi Terminal 5 and also Megaport in Tuas. The second best performer, Franken Group. Since 16 July, not too bad, but actually this is massively underperforming. For example, one of his key customers, ASML. And with that, let's move on to the best performer in the list, which is none other than iFast Corporation. iFast has surged up from 16 July, which is around a 3 months performance. Spectacular gains, correct? Luckily, I'm a shareholder. And also, if you see, it surged up and crashed. And then now it's picking up again. So I'd like to give you a bit more context as to what happened in a quick while. But all in all, these 4 allocations, Sheng Siong, Tiong Woon, Franken and iFast, are all in the small cap space whereby MAS has the equity development program, and in combination, this 100,000 allocated would have risen 16%. 3 months, 16%. Fantastic, correct? Timing is good, luck is good, I understand. But I also say that with Sheng Siong as the big anchor, the risk-adjusted return is actually pretty good. So I'm happy with that suggestion. And just now I mentioned about the equity development program, I want to pivot to the next chapter, which is what I've observed. Again, over here, this is a speculation. On this fund, Fullerton Singapore Value Up, details are not revealed as of this time of filming. Maybe they are acquisition phase, so they don't need to produce a fact sheet for us to see what the holdings. Anyway, this Singapore Fullerton Value Up fund is going to invest with large, mid and small cap companies, and they are going with a high conviction best ideas approach of 20 to 40 stocks. Coming to here, I'd like to also address this question. Hey Josh, can active managers beat the index or not? If you think about it, this fund itself is active investing, correct? Does Temasek believe passive investing is the best? Probably not, right? There are methods to get returns above passive investing. And to one-shot blanket say passive investing is definitely better may or may not be true. So I'll leave you with that food of thought and move on next to show you what I have observed. Again, this is my own speculation. I can't prove it because details are not public anyway. So if there are inaccuracies, forgive me on that. I observed a few transactions. CSCT has this new purchase by Fullerton Asset Management very recently. Is this part of this fund? Not many people can buy $10 million worth one shot, correct? So I think there is a chance. What about this? iFast Corp, also bought by Fullerton Asset Management. This is $1+ million worth. Much smaller than CICT and could also be part of that value up fund. And in fact, this buying continued in mid of October at around $9.30. So keep this in mind on what Fullerton has been buying into. My speculation again, and I hope so, because if they have bought $1+ million, that means iFast is part of that list. That means also they'll be looking to acquire more, correct? You can't just acquire $1+ million and that's it. So let me know. I want to dig at details, and I think that is my own personal conclusion. And I also have this suspicion. If you check the share price in August, iFast actually plunged 8.5% when a Temasek Link shareholder sold away massive stakes of it. Counter drops $1.11 within 9 minutes. Very scary, correct? But the timing seems very coincidental. But as always, with any sell down, it could be opportunity. iFast CEO Mr. Lim has actually bought on 22nd August at $8.23. This is a 500,000 purchase, so it's not a small amount. And for myself, I've actually made purchases of iFast. I saw it as an opportunity, and that's why I've loaded up. And that's why my portfolio now is closing in on $1 million. Singapore stocks only, CDP account. I never thought I could journey that far. And when I crack this 1 million mark, I'll share with you a full portfolio breakdown as a way to celebrate that event. So if you're keen for an episode, smash the subscribe, stay tuned for it, and check out this previous video I have. Hopefully it can help you further in your investment journey, and let's hwat together as we move towards 2026. Thank you for watching, and goodbye.